Okay, we are in April and we will start as always with billing our clients. We already uploaded the uh, time cards data in order to bill people for March, so all the data for March is in. And now we will just create those invoices and bill them, and again we will put that through accounts receivable. However, this will be our last month where we do that level of details for booking. And in the following months, we will reduce, just like with our previous simulations, to demonstrate that there are faster ways to book, especially if you're not in the live bookkeeping mode. However, it will sacrifice some details. So let's begin again. At this point, we will still do very high level of details, just like we did the first 3 months. However, in May, you will see that we will bypass, for example, accounts payable, we will bypass accounts receivables, and show you how you can do it faster. And then with every month, we will kind of default to that, what we call the crunch bookkeeping mode, where you just need to get the data in without necessarily the level of the details that you get when you actually have the time cards entered. Anyway, let's get on it with it. And then again, we made some adjustments to our chart of accounts as well. So in addition to payroll wages, we separated that. So we have payroll wages and payroll taxes. So that will be interesting again to see. And we also rearranged some account numbers just to make them a little bit better, which is again typical, right? As you start bookkeeping, you see kind of how things flow, and then you update your general ledger. Again, it will have no major effect on anything. It's just the organizational element. So again, let's get going. So again, create invoice is very similar to what we did before, right? So here we have our first invoice that we're going to send out would be for DeCre properties. Here it is. Here's the time card again. In April, we have those time cards for March, right? So we're billing in April, first beginning of April, we entered all the data for March. Select all, so here it is, 1,900, here it is. Again, the reason we did it is to demonstrate that when you enter the time into the time cards, you do not impact debits and credits. However, once you start processing invoices, like we are right now, okay, that's when you actually impact debits and credits. So again, in this situation, what's happening, right? We have bookkeeping and we have payroll income. So we have two types of incomes. Also, just to show you, and this setup is actually done kind of during the setup. So there is a setup that says, okay, these items, specifically bookkeeping and payroll, right? They're tied to so bookkeeping is bookkeeping services income, 41,200, and then so again we can show you right here, right? So this is our chart of accounts, right? So here it is, right? Services overall we roll up to 41,000, but then we have tax preparation, we have added. Oh, oops, let me add an extra zero in there. Good. So we also introduced uncategorized accounting income. That's where we will book things and then later allocate them to those categories using other data sources. But in this case, we're booking payroll and bookkeeping services. So it's 41,200, right? And then 41,400. Anyway, let's get on it. So what's happening here? Well, one thing we know for sure, right, is that our accounts receivable will go up. And accounts receivable is an asset. Assets go up when debited. So here it is. Again, it's not shown on this interface. However, it's there. It's the setups that QuickBooks has. So all software has it. All right, what else is happening? Revenue goes up. Revenue goes up when credited. So, and it makes sense because debits and credits have to be in balance. And we just discussed it, right? So we have bookkeeping revenue and we have payroll services revenue. Now we just have to show how it allocates, right? So in this case, we have to, and again, we're not going to do that going forward, but again, it's important to demonstrate that you understand those 237. 23750, right? So we're adding up all the bookkeeping, 23750. So that's our bookkeeping revenue, and then we have payroll revenue, 30875, right? 30875 plus 95. Right, here it is. Right, so again, each one of these items is a credit to either 41200 or 41400, depending on, all right, if it's bookkeeping or if it's payroll, right? So revenue goes up. We could also, like we've done in the past, just documented here as increase to 41,000 account, right? That's even though it's non-posting account, or we can put it on uncategorized, which we will when we just, book things, and then we'll show you the adjustment journal entry. Anyway, here it is, right? This is our first, so and that's why I'm spending time on it. This amount, balance due 1900, right here, right? That is the debit to 11,000, and then each one of those is credited to either 41,200 or 41,400, and we're going to show you here the sums of those things, right? All right. So here it is. Oops. Here it is. Let's go ahead and continue. Save in new. Invoice date. We got to adjust that because again we're doing it in kind of, even though it's live, it's retro mode, right? So we have to watch that because right now it's not April 2021. We're in 2022 right now. Okay, save in new. Oops, I have email later. Check that. All right, next one is for DeCre snacks. Again, we're gonna pick up pace. Okay, here it is. Select all 2,612 and 50. Yep. All right. So again, accounts receivables goes up, right? And then again, let's not segregate it. We just know that all of that will get rolled up to account 41,000, which is our revenue account, right? And revenue goes up when credited. So here it is. All right, let's just make sure we have our invoice number. All good, right? Again, these amounts are credits. This amount is debit to 11,000. These amounts are credits to 41,000 type accounts. They roll up depending on the relationship between the bookkeeping and payroll, right? And we just demonstrated that. Okay, let's continue. We'll kind of pick up pace here. So here's food and snacks. All right. Yeah, this one is easy, right? We can show it's just one line item. We just got to make sure that we have our invoice here correctly. Okay. So again, accounts receivables goes up. Again, QuickBooks doesn't show that in the interface, although my personal opinion they should, but they don't. Anyway, payroll services. Let's see. Our payroll services income is 41,400. Here it is, right? And by the way, if you want, when we release this book, which is coming up here in the next couple of weeks, we will have the chart of accounts that is actually fixed and like good to go, so you can use it to book and follow along. Or if you just want the copy of that chart of accounts, just email me and I'll email it to you, so that again you have it handy. However, again, it's a very fluid thing. Anyway, debits and credits makes sense, right? So I'm just going to keep going because again I kind of explained it. So now we can again we know that this is a debit. This is a credit. It's a credit to 41,400. This is a debit to 11,000. Okay. Okay. Saving new. Next one is Clean Depot. Okay. Select all. It makes sense. Everything is here. So we're just going to do and 41,000 type accounts, right? So again, we just know debits and credits. That's what's important. There they are, right? Okay, here it is. But just make sure the invoice number posted correctly, because again, we're generating invoices in QuickBooks, but in the simulation we already have them pre-generated. So now we're just kind of matching. All right, all good. Debits and credits, right? This is your debit. These are your credits right here. Oh shoot, this options ticket. Yep. Okay. Next one for Go packs again. This one we can actually easy to show. Select all. We don't have to do math on the go. Specifically, so our sales tax falls under accounting services income, which is 41,100. All right. Alternatively, we could use, so that's again. I just want to show it here. So this is credit. This is this credit right here. So this amount right here is a credit to account 41,100. It also rolls up to 41,000 type, right? So that would be also an accurate way to show it. And then this amount right here, right? So the debit to account 11,000, accounts receivable. None of it is shown here on this interface. And some people tell me, well, not all interfaces have debits and credits. Yeah, well, so far I showed you that the only interface that doesn't have debits and credits is the entering time cards. All right, and then those are, as you can see, they're converted right here into debits and credits once we start creating the invoices, and then we're hitting our general ledger. But when we post the time, we don't. I mean, we could, but we don't. In big organizations where they have to base it on accrue, and for different, it's different software, they actually accrue to indicate the liability as they go. Of course, if you have several thousands of employees, like 100,000 employees, you kind of have to at that point. All right, let's continue. All right, food traders. All right, select all, 6,200. Yep, income tax. Again, we can show this one. That's our tax preparation services. That's 41,500. 41,500. Right. Oops. 41,500. 6240. 6240. There it is. Right. So these are credits. This is debit. Debit to 11,000. These are credits to 41,500. We could also show it's like this because 41,500 rolls up to 41,000, as we showed you. Anyway, but in this case, it's very easy to segregate it. Technically, we can break it down even further. So it be right in. Accurate. All right. There it is. That is correct. Each one of these items is right here, and each one of them is a credit to 41,500. And then the total here, it's a debit to 11,000. All right, let's continue. Gas station on Main. There it is. We have some bookkeeping and income tax. Okay, I'll just look at. I keep saying, oh yeah, we're gonna move forward fast. I like debits and credits, right? So anyway, I promise we will expedite it a little bit because we showed it to you. Right, we could break it down to individual line items, but again, the bottom line is all of these are credits that roll up to 41,000, and then the total is a debit to 11,000 accounts receivable. All right. I'm messing up with my invoice numbers, right? We could reconcile that. But when you generate the invoices in QuickBooks, you wouldn't have that problem. So again, for purposes of debits and credits, this is good from standpoint of having duplicate invoice numbers, probably not as. Let's see, what do we have here? Right. Okay, so that's our income tax. If you remember, it's 41,500. Right. So here it is. These are your debits and credits behind this interface. Ah. All right, invoice number is here. All good. All right, we know our debits and credits. Let's continue. Okay. Similar here. Let's see. There it is, right? Debits and credits every single time, except for entering time cards. It makes sense. Income tax, that's your tax season. So the firm spent time in March working on preparation of tax returns, and now we're billing the client. Right? That's your debits and credits. In case you didn't know them by now. All right, let's. And you can see that some of our clients are also providing services to us, which is very typical. Yeah, that's cool to see that as we expand the simulations and we do them for other businesses, that you'll see those other businesses showing up, right? Because you're already familiar with them. Anyway, there's your debits and credits. Let's keep going. Invoice number is there. Okay. Oh, didn't like that. Oh, that's okay. It doesn't affect our debits and credits. Okay. Hey, this is payroll. Ta-da. It'll be payroll, right? Even though it's tax season, people still need payroll services. And payroll services is 41,400. Okay. There it is. All right. Date is correct. Let's save it. Okay. And just roll up. Yeah, probably I forgot to change it at one point or multiple points, and then it created conflicting numbers. Yeah, we can catch them and fix them down the line. End of the year if we have to. Might be a good exercise there. Anyway, 751750 debits and credits understood. Let's keep going. There it is. There are debits, there's your debits and credits. All right, voila. Good to go. Let's keep going. Invoice number, yep. Right here, 7590, 7590. Alright, so let's see, we know our debits and credits. Invoice number is correct. Let's keep going. We'll keep the number. Let's see. Alright, so let's keep billing our clients. That's our income tax. Alright, so we can show this one. 41,500. 536,250. 536,250. There it is. Alright. There's your debits and credits, right? Income tax. We just did that. So again, to refresh, each one of this is a credit to 41,500. Let's just break it down. I'll do it. Just to solidify, right? Again, alternatively, let's say we didn't want to keep that level of detail for recognizing our revenue, like different types of revenue. I mean, ultimately, it all rolls up to 41,000 and those liquid essentially. This would be correct, right? If we didn't care which revenue is consulting, accounting, services income, tax preparation income, and if we rolled it up all up to services revenue income, that's it. This is perfectly fine. Again, the most important part is that you know debits and credits behind this interface. Again, here's our income tax. So this one is for basic bonds. Okay. Okay, so this one income tax, so technically we could do this, right? 1,65750. 7 this, right, and then this is 341,250, right? So this is debit to 11,000. This is credit to 41,500. This is credit to 41,500, right? This is credits to 41,500. This is debit to 11,000. Right, so, right. Again, another income tax. This one is easy to show as far as debits and credits. I mean, they're all easy to show technically, right? There's absolutely nothing complicated behind it as long as you understand. Right, debit and credit, there they are. Okay, save and continue. All right. And in the future months, again, we're not going to keep that level of detail. We're kind of gonna go through it more in a catch-up mode, which you are familiar with from our food truck simulation. This one, again, the volume of data will be substantially more, very substantially more, as you can see, and therefore it will be, you will appreciate the speed, but at the same time, again, you will understand the sacrifice of level of the details. Okay, let's update our invoice number. Here we have consolidated type. Okay, and again, I want to encourage everybody to subscribe to our channel as we plan additional simulations. So again, you can see that daycare comes up. So we have one of those in works to show bookkeeping for a daycare. So again, all those multiple types of companies, right? So you get familiar with debits and credits behind those. Okay, saving. 41,500 because all of it is income tax. Actually, on the previous one, oops. On the previous one, we're gonna go back for a second. Let me just get the invoice number correct right here. So we got this one, save, and then we're gonna go back. You see, I didn't do something correctly. On the previous, I had 41,500, so it's actually, to roll it up, it's gonna roll up to 41,000. Again, it's a technical element I want to show. Again, debits and credits will not change as far as, these will be credits, this will be debit. However, previously I didn't show the roll up. I ended up showing that it was to 41,500. It's not. Okay. It shows past due because we're technically not in 2021. All right, a couple more and we'll be done with billing. But again, billing is an important part of running a business. So here it is, bookkeeping. All right. Okay, so our bookkeeping income, booking services income 41,200. Oops. Good. So in this case, it's 2,660, 2,660. These are your debits and credits. Okay, makes sense. Accounts receivable goes up, revenue goes up. We're not touching cash yet, but then when we do touch cash, we're not touching revenue, right? Makes sense. And then again, in the future months, we'll show you how to book bypassing accounts receivable. Anyway, stay tuned. It's all coming up. It's okay, this is actually bookkeeping, so we can go with that. There it is. There's your debits and credits behind this interface, and don't believe people that tell you there are no debits and credits behind it. They're there. It's just people who don't know bookkeeping think that they're not there, but they're there. And as bookkeepers, we gotta know it. Yeah, invoice number, I messed up. Probably somewhere down in the previous months, but we'll correct it. Again, I'll show you a really cool way to correct it. We'll have a video for that just so that. Sorry, wholesale produce. Alright, so that's our income tax, 41,500, 485, 485, there it is. See, kept the invoice number, all good. Again, once we book it, accounts receivable goes up because it is debited with this amount, and our sales go up because they're credited with these amounts. Alright, saving you. Some individual returns. So all of those go towards tax preparation. Those look like individual returns. We're doing for $585. Again, our revenue goes up because it is credited right here. That's the credit, right, to our tax preparation services, and this is a debit to accounts receivable because we haven't received the money. If we took the money right away and bypassed, right, our account balance with the bank would go up. We will show it in the following months, so please stay tuned. More fun stuff to come. All right, then we have this one. Again, another individual return preparation. All right, debits and credits. You know them by now. Okay, invoice number is correct. And then we'll do a special one for correcting invoice numbers. I promise. Individual taxpayers here. Makes sense. And people typically start doing their returns around this time. Oh, okay. 68250, same amount of money, makes sense. A lot of returns are very much similar. Right. Okay. Same thing. 828, 75, 828, 75. There it is. Just get the invoice number correctly. There it is. There's your debits and credits. Okay. We're still billing for individual tax returns here. And all good. Debits and credits. All right. Few more. Definitely, if you want to practice and experience what it's like bookkeeping for and billing for a real firm, this will give you that experience. That's the volume. I mean, clearly some have much more, but this puts you in the ballpark. All right, still income tax preparation, invoice number correct, saving you. Quite a bit, right? But that's kind of the idea. First of all, practice makes it perfect. Second, that's what you would have to deal with. All right, there's your debits and credits. Let's keep going. Few more. All right, we're billing our clients, we're increasing our accounts receivables, and we're increasing our sales. Again, as cash-based taxpayer, we would not technically, for tax purposes, recognize this sale and not, pay taxes on it until we receive. Bigger organizations would have to be taxed on it as they bill, as they earn it, as you accrue. All right, here it is. You know your debits and credits. Down. Let's keep going. Credits, same amount. No need to worry about that. Just make sure our invoice number is correct here. All right, saving you. Okay, those are our debits and credits. We know they are there. Don't believe anybody who tells you otherwise. This is your debit. This is your credit. All right, invoice number is there. Saving you. Still an income, right? That's the tax season. Very typical. All right, those are your debits and credits, and you know them. My invoice number is fix them. I know. Fix them. I'll show you that. All right. There it is. Still preparing income tax returns for individual taxpayers, right? Like very typical. And there it is. Debits and credits. All right. So again, debit, credit, credit to 41,500, alternatively to 41,000, because that's where it's going to roll up, right? And it is a debit right here, debit to 11,000. Right? There's your debits and credits. You know them by now. Still income tax preparation. See? Client with individual tax returns. Right, here it is. Debits and credits. That's your debit. That's your credit. You know that. This for there it is. Not much change, but just the amounts. All the debits and credits, you know them by now. So it's similar situation. And again, we could update the terms too. I mean, I kind of stopped doing it, but that's really good. But again, the most important part in this exercise is debits and credits, as we should. Okay, income tax, save, continue. Yes, update this. Oh, we have easy March, right? Easy March. 22.3. Yes, we can set it. Have to really do that, but again, the most important part is what's debits and where's your credits. Because again, what's increasing? And you need to know. Accounts receivable is going up right here by this amount. Your sales are going up by this amount. And debits and credits, you know. All right, last one. Last one. Last one we'll do at that level of detail, this level of details. Going forward, you'll see, we will sacrifice this level of details. But that's fine, because, we spent enough time showing you your debits and credits with that level of detail. And then we will bypass accounts receivable. And again, stay tuned. Few more interesting months of these simulations are coming right up. Again, on this last one, right? Let's solidify. This is your debit to 11,000. This is your credit to 41,500. Revenue goes up when credited, right? Accounts receivable as an asset goes up when debited. Good to go. Save and close. Oops. Save and close. Yes. There it is, right? We're done billing our clients for the month of March because we do it at the beginning of April. As a result, what happened? We kept increasing our accounts receivable. It's an asset, right? We kept debiting it. And we kept increasing our revenue, which rolls up to 41,000. So all these amounts, right, they hit the debit right here, and they hit the credit right here. All right, revenue goes up when credited. Accounts receivable in this case, it's an asset. Assets go up when debited. Ta-da! That concludes billing our clients for March at the beginning of April. Now we're going to receive the payments and deposit them.